Eric Muathe with Muathe.com. Let's take a look at the Brazilian market, which is down today, down about 8 to 9% at the open. And this makes sense if you take a look at the long-term monthly chart we've been discussing over the last couple of weeks. And here we have the EWZ, the Brazilian market ETF that trades in the US. We've been watching this break level that took place in 2011. And we had seen that pretty much what the Brazilian market was doing was coming back to test this level. As you can see, this is where it stalled in 2014 on a monthly basis, and over the last about 7 to 8 months we've hit this line twice. In fact, we can even say 3 times, and the market is responding to that line already with this drop. Now keep in mind, at some point in the beginning of May, it looked like we were going to get a breakout, but it was a huge question mark as to whether this was actually a trap and that the blue line was going to be a problem here. Looks like the market is responding to that level. Keep in mind, we've been observing that this happens to be at about 61.8, and I'm talking about this blue line, which is the uniform activity line. Check the description for a link discussing this in detail. So it looks like the line is at about 61.8, a level where if you see a reversal, more than likely leads to a major drop. One other observation before today's drop, this is yesterday's weekly chart before the gap down this morning, and we can see even the weekly was showing this type of negative divergence here, and that could have set the stage for what we are seeing is a big drop. So now if I go ahead and refresh that chart to include today's action, this is what it looks like. So let's go take a look at the, so here we have today's action, and we can see now we have this confirmed negative divergence line, in that the last weekly high came with declining technical strength, also failed to move above the RSI level of 69.1. And keep in mind, we are also having a huge reaction down here because the weekly RSI is punching through the RSI 50 level. I call that the RSI crossing phenomena, and that is exactly what happens when you move below 50 on any time frame. You tend to have some type of an expansion in the price action in the direction of the break. So now the question becomes, where is the potential support going to be, if there's going to be support? And the first level to watch was this entry here, which gave us the entry off the lows of 2016. So this RSI movement here is what is going to be tested in the coming weeks. And if the market can hold right there, if it can bounce on this line here, that's going to be good enough to stop the slide on a weekly chart. And at the same time, if we break through that black line, chances are that's going to lead to more selling. So either we get support around current levels on a week-to-week basis, or we break through that and we get a substantial move to the downside. Eric Muathe with Muathe.com. As always, good luck, peace, and